Joining us for a look at the day's markets action is McCurrie from FNB Wealth and Investments. Thank you so much for your time, Wayne. Not a pleasing picture there on the currency front, of course, compared to what we saw last week when it was at 18 Rand, just under 18 Rand. Now we're seeing it weakening significantly now at 18 Rand 62 against the US dollar. Are markets still focusing on a GNU developments, or are they maybe looking past it at this point?
Look, I don't think this big weakness here has to do with the GNU. Overseas, internationally, the emerging markets were quite weak. So, the Rand does this. It'll give you a huge spurt. I mean, it's done this actually a few times over the last year, where it strengthens quite materially down to 18 and then it weakens again, then it strengthens again. So I think the Rand's still going to stay, let's call it in the 18 to 19 range, until we get a definitive sign that interest rate cuts worldwide are around the corner. Now, as you spoke about earlier on, the Federal Reserve Bank spoke today saying, look, we notice inflation's coming down, but we need a little bit more evidence, et cetera, et cetera. When the next inflation number comes out, if that's good, when the jobs data comes out on Friday, if that's good as far as inflation is concerned, then the Rand will probably strengthen again. So it's literally been sitting in this, let's call it the 18 to 19 band, for a sustained time period now, since about halfway through last year. So it's a full year it's been sitting in this sort of band. And it's going to do that, as I said, I think, until we get a definitive answer on interest rates. And then the Rand could strengthen quite materially. I mean, it's still our view that fair value is below 1750 now. Once again, as you mentioned, 1750 wasn't that far away. Literally on Monday, yesterday, and last week. But the Rand is volatile, and until we get an answer on interest rates, as I've said, I think this volatility could well remain.
Yeah. Well, let's get into company news. And of course, one company that is affected by, the impact of interest rates. Of course, we know with high interest rates, not so much optimism on the economic growth globally. Also, demand. ArcelorMittal, they're citing weak demand domestically, but also looking at pressures from China's demand. Also, saying that they have been dealing with steel price softness.
Yes.
We did see investors there punishing the stock by more than 4%. Of course, saying that in its interim period, they expect the loss to widen. Was this expected?
I think so. Look, this is a very difficult industry, this. I mean, if you read their statement that they came out with, the global steel industry is just in turmoil. There's excess capacity in China. They're just dumping that steel all over the world. Other countries are imposing either tariff or non-tariff barriers for steel coming into their country. So Arcelor is hugely volatile, and unfortunately, most of that is totally beyond their control. I mean, it's similar to the chicken business. There's not actually much you can do. You just got to take the price that comes along. Of course, when things go well, I mean, the Arcelor share price, 2 years ago, went from 1 Rand to 10 Rand. Now it's back at 1 Rand. This is unfortunately the volatility that's associated with the steel industry. It's an incredibly difficult industry to be in.
Yeah, indeed. Wayne, we also did get some news coming out of Brait and Ethos Capital. Of course, there was an extraordinary general meeting there that Brait held. Of course, they're going through their recapitalization plan, but also the unbundling, the process of being unbundled from Ethos. Are there any things that have stuck out for you from that meeting today?
Look, I mean, the unbundling, they're just saying, well, shareholders, you must decide what you're going to do with these shares. We don't want it as part of our portfolio anymore. Essentially, that's what they're saying, and they're unbundling it. Now, of course, Brait is an absolute disaster.
Yeah.
I mean, this was one of the winning shares on the JSE. Now, I'm just looking at the price chart here.
Yeah.
Over the last 5 years, it's down 95%.
Yeah.
But that doesn't tell the whole picture. 5 years ago, the share price was 20 Rand. A couple of years before that, I think it was 130 or 140 rand. So this share's gone from 140 down to 1 rand. Now I know they've unbundled Premier, and you've got to take, or part of most of Premier, and you've got to take that into account. But this company's saddled with too much debt. They've got to recapitalize, and they are busy winding down all of their investments. You know, they've sold the Iceland business, and they've got to sell the Virgin business, and they've got to sell the New Look, and New Look is actually what caused the catastrophe for this company.
Yeah.
I mean, that was a terrible, terrible business decision, that to buy New Look.
Yeah, and of course, we're going to be looking out in terms of how investors react as we progress with the rights offer. Wayne, let us take a look at your stock pick for today. What are you picking?
Yeah, look, I mean, I know all the stories today going around about Standard Bank and, you know, the potential security breach there, and everything going on social media. Standard Bank says there's not a breach, but that's not the reason why I'm choosing Standard Bank.
Yeah.
I mean, I know these shares, all the banks have run quite hard, but I think they still show value. So maybe to buy into a little bit of weakness like we've seen today might not be a bad thing. I mean, it's sitting at an 8 price earnings ratio. It's got a 7% dividend yield. So despite the fact that it's run from 175 to over 200 over the very short time space, I mean, essentially on the back of the GNU and the political dispensation in South Africa, I think over the medium term, these shares still show a lot of value. So I'm taking Standard Bank.
All right. Well, thank you so much for your time and giving us insights on what has moved investors' money today. That was Wayne McCurrie from FNB Wealth and Investments.